Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to Share Talk. Today I'm joined by Harvey Sinclair, who's CEO at E-Energy with the ticker EAAS. How are you today, Harvey?
Good morning. Yeah, good to be here.
Right, we've got a company which, I was keen to speak to you because I normally know every single company on the market, obviously, but yours was not quite as shining, not quite as bright in my consciousness as others. Could you just tell us what you do?
Sure, yeah. So E-Energy is an energy efficiency as a service business. Our core business is E-Light. We provide light as a service to businesses and public sector organizations. And what that really means is we transition our customers to LED lighting through a subscription fee. So it avoids them having to invest up front in capital to energy efficiency lighting. They get to benefit from all of the great, if you like, aspects of going to LED lighting, which in addition to, great operating improvement is all around energy reduction. And the savings that we deliver to the companies is always more than the subscription fee. So they're actually able to unlock net cash from day one. And therefore, it's a win-win for both the customer and E-Light.
So if I'm sitting in my office and I've just hired you 3 months ago, I'm getting cash. I'm getting a check from you. Is that right?
Essentially, yeah. You're repurposing your old utility bill. So the way it works is we deliver a turnkey solution. Your energy bill will be reduced by anywhere between 60 and 70% as a result of your energy costs from lighting. And the savings that you are then making, you're paying some back to us and you're keeping the rest. So as a result of a much reduced utility bill through electricity, you're net positive at the end of the month.
So you've chosen a niche which is very inefficient, and you're basically just you're going around tidying it up on a nuclear scale, let's say.
Yeah, look, essentially, lighting is, to be honest, the first measure that any business should be looking at to reduce their energy costs, because it delivers huge savings. And it's a proven technology. So, when you look at the education sector, you've got 80% of all schools still on old lights. So they've not only got maintenance and issues with failing lighting levels and a pain to maintain replacing them, they've also got a very big emotional driver to drive down their energy costs. So lighting is the first measure that anyone should be looking at. And we're looking to lead, dominate in this market. So we're the leader in education. We're moving into healthcare. We're also starting to be much more prevalent in the commercial food services space, which is obviously a huge growth sector at the moment.
So basically, we've had 6 months, 8 months of pandemic, but you're in both the public and private arena. So let's say that effect for you is not significant. Is that right?
Yeah, correct. We've seen massive growth. We've gone through a tipping point. We've seen 500% year-on-year growth. We've now completed over 1,000 projects. We delivered a 4 million revenue delivery in the first quarter of this year, which is, as I say, up 500% from the previous year. The market that we're focused on, which is the education sector primarily at the moment, has been largely unaffected by COVID, certainly from a financial perspective, but actually, logistically, what we saw in lockdown was the ability for us to gain access to a lot of schools where otherwise they'd have been busy with students and pupils. So we've actually been able to optimize our delivery platform as a result of schools being, if you like, in low occupancy numbers over the summer. And we found that, going back post-September, actually, there is a huge drive. In fact, the government are even behind this whole carbon reduction net zero strategy and are investing heavily through grants and through essentially 0% finance for schools, which allows us to partner alongside that free money, so to speak, to be the delivery partner for the state school sector, which complements very nicely the launch of our initiative in the independent schools. We've got a two-pronged attack. One working with government subsidy money in the education state sector, and the other using our light as a service funded model in the independent sector.
Right. I mean, normally in growth situations, the only barriers, I suppose, are scalability, capacity, and at the end of the day, your customer knowing about you. So marketing, really, just that they just. I mean, it's a great idea, but if people don't know about how much they can save with you, then it's not going to happen. How are you addressing those issues?
Yeah, they're good questions. So on the marketing side, we spent the last 2 years building out channel partners who are plugged into the schools community, whether that's the Bursa's communities or whether it's the logistics and facilities partner channels. We have a integrated digital strategy that essentially sees us drive huge volume of inquiries through our various direct and indirect social and online strategies. Last year we had obviously much less presence in the physical events sector, which was hugely successful the year before. But we're finding that awareness is definitely not a barrier. We are keeping up with demand, and we're scaling operations. We've just hired earlier this year a new operations director who ran the entire operations platform for GE in the lighting space, and it's successfully delivered over 300,000 fittings across a large supermarket estate. So has extreme experience, a lot of experience in extreme short, if you like, operating timeframes to deliver mass rollout. So we've got scaled up operations. We did 70 schools in an 8-week period over the summer holidays, which was more than we'd done the previous year. So we demonstrated that, over an 8-week period, we're able to deliver as much as we had done the previous year. But yes, clearly we are constantly challenged by being a growth business, but we've assembled a team that are experienced in that and sort of what we consider to be best in the market for meeting those demands.
And the strategy for 2021 going forward, is it to acquire to grow?
Absolutely, yeah. We've come to the market specifically, really, to drive an M&A play. We see the energy services sector highly fragmented. Customers, whether that's public sector or private, have to go through a very difficult journey if they are trying to pull together their own energy efficiency, net zero strategy. So we think there's an amazing opportunity to bring together complementary businesses to our energy as a service offering, which is simply allowing customers to reduce energy costs currently through lighting. We're looking at electrification of heating as the next bounce in that energy efficiency space. We're looking at acquiring businesses in the energy management, which is essentially energy procurement and energy advisory consultancy space. What that allows us to do is acquire really good earnings, reliable, predictable, recurring revenues, but also a large customer base where that acquisition has a relationship with the meter for their customers. And essentially what that allows us to do is leverage their customer base who they have strong relationships with to drive down energy consumption through our as a service existing offer. So yes, acquisitions is very much my focus outside of managing the team at eLight. And we think that this year is a really exciting opportunity for us to bulk up in volume. And we've got a large pipeline of engaged M&A targets that are motivated by our strategy and are looking at both majority, to be honest, looking at paper considerations with the view that they're joining the strategy, not cashing out, which is often a big concern when you're acquiring a business. You lose a lot of talent, whereas the reverse in this case.
So you've got the recurring revenue, you've got the rollout, and the M&A hopefully coming through as well.
Exactly, yeah, and I've got a track record of having delivered this before. So my last AIM-listed business acquired 12 businesses over a 3-year period, and we successfully integrated and then sold through an exit to a large news group in 2006. So different sector, very, very similar dynamics in terms of a disruptive opportunity in a sector which is growing but fragmented.
Harvey Sinclair, CEO at eEnergy, thank you very much indeed.
Thank you.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.